Hi, this is Adam. Welcome to the Interaxis YouTube channel and Interaxis.io. Today we're going to talk more about traditional finance, right? We're going to go talk about real financial planning. We're getting away from DeFi a little bit because what we found is more people need to understand traditional finance to get to the decentralized finance topics, and it's just something we want to talk about. It's really important, really. It's not super interesting to everybody, but that sometimes makes it even more important. So what we're gonna talk about here is traditional financial planning and what that means. I had another video where we talked about what financial advisors are and how they can actually help you. We're going to run through a little bit about what you should be evaluating with your own financial planning. We're not going to tell you what to do. Again, as we say over and over again, we're not giving you financial advice. We're just going through some of the things that you really need to evaluate in terms of your own personal financial plan. So whether you're using an advisor, which of course we recommend, or you're trying to do it yourself, we want to talk about some of the issues that you really should be looking at in terms of your own financial plan, whether it's for you individually, if you're on your own, you're single, or for you as a family. So what do we mean when we talk about financial planning? Financial planning is looking at all of your, potentially all of your income, your assets, your debts, and figuring out how it all works together now and in your future, right? So what you need to be doing is identifying, okay, first of all, what is my income? How am I making money? Is it from a salary? Is it from contract positions? What might it be? And what am I going to do with that money? Okay, so a certain amount of income, and I need to do what's called allocation. And I'm not talking about allocation in terms of how much in stocks or how much in funds or how much in bonds. I'm talking about allocation in terms of the amount of money that comes into my bank account every month. Where is that money going to go? And that's kind of setting a budget, but what I'm talking about in terms of allocation, how we're going to allocate income, assets, debt, etc. And here are the things you need to kind of look at. In terms of income, how are we going to allocate income? Okay, some of it is going to just pay my bills, my expenses, right? So I have to figure out what are my expenses every month. All right, I might have expenses for my home, which might be rent or mortgage, maybe a car, maybe certain insurance that I need, which we're going to talk about probably in another video. We're going to talk about risk, whatever other bills I might need or want, right? I need probably need a phone. I might want or need internet, TV. Obviously, I have to eat, so I got to have some food in there. So there's all my expenses. Then I probably want some sort of savings, right? So I have to save some money. Now, some of this is going to go straight into the bank or some sort of safe liquid money. When we say liquid, what we mean is money I can get to right away anytime I need it, pretty much. Okay, so liquidity or liquid money, when we talk about in this video and other videos, is what can I get to if I need it tomorrow? An example I have is last week, I had to replace the water heater in my house. I had to go spend, $1,000 on a water heater right away. I didn't really have a choice. Okay, if I didn't have the $1,000, and here's why liquidity is important. If I didn't have that $1,000 right away, I was going to have to put it on a credit card. Well, what happens when you put something like that on a credit card? Your debt goes up. You start accumulating interest. So if that credit card has an interest rate of 15%, and that water heater costs $1,000, it actually, if I wait long enough to pay it, it could cost me upwards of $1,100, right? Well, that extra 15% is money I didn't really need to spend if I have the liquidity. Okay, so some of my savings is going to go towards in the bank. Some can go towards something like retirement, which is another part of my allocation. Some can go towards say some sort of growth, but is not retirement savings, something that is semi-liquid, you might say. You can save for something like college. So all of that is part of savings. Now, where else can my income go? My income can go to things like protection. What is protection? Protection usually involves some sort of insurance products, okay? And we'll go into a little bit why those are important. But for the meantime, I have to figure out how I'm going to break up my income, how I'm going to allocate it. So some has to go to pay my bills. Well, first of all, some has to go to pay my taxes, right? That's my first thing. I don't even get a choice of that. Some comes out of my paycheck if I have a paycheck. If I'm just a contract worker, then I need to put away some. Ideally, I go ahead and give some to the government ahead of time, 10% or so I don't incur a penalty later on. We can have a whole section on taxes. Even though I'm not a CPA, I can't give you tax advice, but obviously you have to pay your taxes first. Next comes figuring out what your bills are. What are my expenses? I got to pay for my home, whether it's mortgage or rent. I have to pay for my, potentially my car, some sort of transportation to get around. I need to pay for my insurance, which obviously goes towards my protection. I need to pay for my phone and whatever other expenses I have. I need to pay for food, family. I pay for school for my daughter. All those kinds of things. We need to pay for our expenses, and then we figure out, all right, what are we saving? And sometimes the expenses, you have to say, what do I really need? What are the absolute have-to-haves, right? I have to have some sort of place to live. I have to have some sort of way to communicate, right? The phone. I have to eat. Those things are kind of important. The car, you can decide on it from a budget perspective. Do I need a really expensive car? Do I need a not so expensive car? Am I going to buy or lease? Those are conversations that we're going to have in future videos. But those are really important conversations, really important things to think through as you go through your budget. You also have to think about now your savings. How much is going to go into a bank? These are topics that you can potentially talk about with a financial advisor, or we can go through right here. How much is going to go into the bank? Now, admittedly, money in the bank is not sexy, right? It does not grow at a very high rate of interest. However, it is highly liquid. That means whether it's in a savings account that I can get to really easily, or a checking account that I can get to really easily, and I can use a debit card, or I can get the cash out really quickly. I can use a debit card like a credit card, something like that, or write checks for, or whatever it might be. Use Venmo or Cash App or whatever to send money. Money in the bank, cash is always king, okay? Because in the absence of having cash, if I need cash, I have to go into debt. Those are the only two options, right? If I need to pay $1,000 for a new water heater to be installed today, and I don't have the $1,000 in the bank, I have to go into debt. Those are the only two options. Okay, so it's nice to have some cash on hand, because it means that should I need that money, I don't have to take it out of my retirement account or my growth account, and I don't have to go into debt. So it's always important to have some sort of, we call it an emergency fund, right? So there's in the bank, some of this is going to go to fund my expenses, and some of it is going to be an emergency fund. And the emergency fund, there are all sorts of rules of thumb. You figure out what yours is. Some people say it's 6 months worth of your income. It could be 6 months worth of your expenses, 9 months worth of your expenses. The emergency fund is going to change based on your lifestyle, based on your job. If your job is one that you could lose like that anytime, if you're a contract employee, whatever it might be, you're probably going to have a little bit bigger emergency fund, because there might be more of a chance that you lose your job, right? If you have potentially more needs, like that your car is getting older, or your home is getting older, or something like that, you might want to build up a little bit more of an emergency fund, cash you can access as quickly as you can. Okay, so you have savings in the bank, you've kind of paid your bills, you have savings in the bank. Now you got to figure out, all right, how much am I going to save towards future goals? Some of those goals are retirement, growth, college. Okay, and we'll have whole different segments on all these different allocations for your savings, retirement, growth, college, etc. But it's really important to allocate money towards those throughout your life, because these are times in your life that you're going to need the money. And if you say, okay, I'm going to put away retirement, my retirement bucket, financial advisors talk about money going into different buckets. Your retirement bucket, there are tax advantage ways to do that. There are ways to do that where you might get matched by your employer a little bit. There are very advantage ways to do that. And if you know that your money's tied up in there, maybe you can afford to take a little bit more risk. Okay, so that's, if I know I don't have to use that money for 30 years, say, I can maybe take a little bit more risk on that, because I say, look, I'm not going to use it anyway. I can afford the ups and downs and I'll look at it when I get closer to retirement or closer to college or something. But this is kind of the financial planning exercises you have to go through. And it's really important to really think through this, because as in the last 10 or 11 years, the stock market, the U.S. stock market and a lot of equity markets have been really just going up and up and up. All anyone thinks about, and admittedly, a lot of financial advisors talk about is we need to put your money in the market and have it grow. Money in the market and have it grow. But what that doesn't take into account is what happens when you need the money? What happens to your budget? What happens to your home if you actually need the money? What happens to your debt? What happens if you lose a job, if one of you loses a job, if you have another child, those kinds of things that you really have to evaluate. Okay, and yes, it'd be great to max out your retirement plan, ideally, 10 years ago, and watch the market go up. But what happens if in that time you really needed the money? Well, you might have, had to break into your retirement account, get a 10% penalty, pay taxes and all that, and it turns out it really wasn't worth it. It's really fun to be invested in the market when it's going up. It's really fun to be invested in anything when it's going up. But everyone has to evaluate it for their own particular family. There is no one-size-fits-all investment plan. There's no one-size-fits-all financial plan. It's up to you to really investigate all this, look into it, and kind of put together your own plan that you feel comfortable. I heard this from someone else, so it's not my thing, but I'll also tell you, everyone has their own inflation rate. Everyone has to understand how much their cost of living is going to go up as they continue to get older. What do I mean by that? Here's an example. I used to work with someone who had 5 children, okay? He had 5 children that he was eventually going to have to send to college. The rate that college is going up in cost, it's growing at an average of 4 to 6% a year growth. The amount I pay for college now is growing at an average of 4 to 6% per year. I have a 5-year-old child, one 5-year-old child. So my inflation rate for college for her, if I intend to pay for college for her, is roughly 4 to 6% a year for the next 13 years, right? If I had 3 children, my inflation rate would be even higher, because I go, man, I'm going to have to pay for 3 children to go to college at different times. So someone who has 3 kids or 5 kids or no kids has a different inflation rate than I do. That's why there's no one-size-fits-all approach. I might say, look, I'm going to be able to continue doing what I do, what I enjoy doing, until I'm 80 or 90 years old. Someone else might go, no, I can only do what I do because of the time I have to put in, how exhausting it is, the stress level, maybe the physical toll it takes for a few years. So their inflation rate is a little bit different than mine. Athletes, football players, for instance, have a career of maybe an average career of like 3 to 5 years, right? Baseball players is a little bit longer, and they might make a little bit more money, but then they have to get that money to last the rest of their life, and they're going to have a lot of things to pay for the rest of their life. They're going to figure out how to make their money last. So everyone has to evaluate this on their own. So the first thing to do is to look at, okay, what are my expenses, right? Figure out your budget. What are my expenses? And then how am I going to save? And we're going to go into each one of these buckets. That's what a lot of these traditional finance videos are going to be about. From a traditional financial planning perspective, what are all these different buckets? And then when we get into all these different buckets or all these different allocations, what are the nuances of each one? What are the nuances of retirement, right? We're going to discuss things like 401k plans. We're going to discuss IRAs, the tax implications, what your options are. We're going to discuss growth, what it's like to be in a brokerage account, right? If you go to, if you try to do it on your own at a Fidelity, Charles Schwab, E-Trader, so if you go through a financial advisor, if you go to a robo-advisor, we're going to talk about all those things. We're definitely going to talk about protection. Protection usually involves some sort of insurance. Why it's so important, even though no one really likes to talk about it, it's extremely important. We're going to talk about debt and how that affects you. And then there's good forms of debt and bad forms of debt. Not all debt is created equal. Not all of it is necessarily bad. Sometimes debt is really great. It's a great tool. As a matter of fact, debt is actually what makes the entire world economy go round. Okay, we could not function with the economy the way it is without debt. It's huge. But what does it mean for you personally? And how do you use good debt and not have to use bad debt? We're going to talk about what are different assets that you might own. Things like home, car, stocks, bonds, funds, debt that you might own. You might own someone else's debt, a business, real estate. We're going to talk about all those different types of assets and what they mean, and that's what we're going to evaluate and look at throughout all these traditional finance videos. Now, we're also going to talk, some about finance for businesses, for example, but mostly what we're going to talk about is financial planning, finances for you individually. We're going to talk about some of these topics, and we're not going to try to replace your current financial advisor. That's not our goal. I think financial advisors are extremely important because they're the ones, as I said in another video, who have to have these tough conversations with you and explain it. But we want to explain it also in a way that we're not biased. We don't care if you do any of these or not. We'd like for you to, but from a compensation standpoint, we don't care. So we want to tell you about how they all work. We've been in the business for quite a while, so we've seen every part of this, right? We've seen people get in, get out, get in at the wrong time, get out at the wrong time, have issues arise, and now we want to share all that experience we have with you from our perspective as financial advisors. We're not giving you advice, but we're just going to tell you how all this works, so that if at any time you want to come, look at these videos, whether your financial advisor is advising you of something, if you're trying to do it yourself, if you read an article, if your brother-in-law, your sister-in-law, or a cousin or a best friend does something else, and you go, man, I want to learn a little bit more about that, come watch one of these videos. We'll probably have it. If we don't have it for you, send us an email, info@interaxis.io, and let us know it's something you want us to talk about, and we can probably hammer it out pretty quickly. If not, we'll get on a call with you and talk about it. So this is kind of what we're going to talk about. I went through the very beginnings of it. I didn't go into great detail because I wanted you to see what some of the topics we're going to discuss in our traditional finance videos. So again, this is the Interaxis YouTube channel. Thanks so much for tuning in. Please subscribe. We're going to have more of these traditional finance videos coming up. Please let us know if there's anything else you want to discuss. Our website is interaxis.io. Email info@interaxis.io. Twitter @interaxis8, the number 8. We look forward to seeing you in more videos and hearing about what you think of these traditional finance videos.